Hello, everybody. It's Kevin, aka North Star from NorthStarBadCharts.com, and I just thought it would be a good idea to explain a little bit about the charting that we do and why it's useful, why it's helpful, and how it works. Really, I know a lot of people who are perhaps visiting my Twitter page for the first time, maybe not too sure about the world of technical charting and how it can be, I think, really helpful when trying to figure out when's a good time to buy shares, when's a good time to carry on holding your shares, and when it's time to kind of exit. And I know that everybody listening to this will have different sort of goals from their trading. Some will be trading sort of daily and weekly, meaning that they're sort of buying and selling shares on a regular basis, taking advantage of movements in the share price that take place, from day to day and from week to week. Other people like me preferring to sort of buy shares and hold on to them for a good period of time, perhaps several months, many months, or in many cases, like myself, many years. Okay, what we've got in front of us here is a chart for Abra Silver. It's one of the silver mining companies that's done particularly well lately, since this time last year. You can see on the chart here, well, since March 2020, when the price was about 6 cents, it's up to around about, it's been up to around about 60 cents. So a move of at least 900% to 1,000% at the peak there. So how do we use technical charting to predict this, and how did we know it was going to happen, and how do we know what's going to happen in the future? Well, one thing that I have been perhaps better known for, I suppose you could say, on social media, is the use of arcs, commonly known as a cup and handle pattern. I'm not sure I like that term particularly, because it implies that when you get this cup, that you're going to get a handle, a sort of a downward price movement at the end of the arc here that forms something that looks like a handle to the cup, and then price goes up. Yeah, that happens sometimes, but often it doesn't happen. Hence why I don't really like the terminology. So I stick to calling them arcs, and that really just comes from the fact that on TradingView here, when you go to draw one of your patterns, if I find the right tool, there you go. It's referred to as an arc in the drawing tools. It's a geometric arc, perfectly symmetrical. So no matter how you draw it, it's a mirror image. The right-hand side is the same as the left-hand side. So I can't manipulate it to make it fit whatever shape I want. It's just not possible, because the software doesn't let you do that. It's always geometrically perfect. So I draw these arcs, and the reason I draw them is because they're common in share price movements. As the share price comes down, it follows the geometric rules laid out by the arc, and it's because price is just forming a base down at the bottom here, and then later on in time, this curve actually projects a resistance point. And if all this sounds like double Dutch to you and sounds like gobbledygook, then I'm not surprised, because if you're not really familiar with the world of charting, then we often make assumptions that people do understand these terms, and it might sound like a foreign language. But what I'm trying to explain is that there's a method that you can use. There are lots of methods that you can use to predict where these prices are going to go, and one of them is using the arc. Another one is to use trend lines, and we've got a descending trend line here. This just move that a little bit, and I can grab hold of the trend line and move it. This line here, and there's a line there that you can draw. Price broke out above it, came back down, tested this horizontal line actually in the March breakdown last year. And you can also draw another trend line that goes more like something like that. Okay, so trend lines are really useful, and it's combining these methods that is the real key. So you can draw an arc, you can draw a trend line, you can also put the moving average on, and the moving average, if I just bring it forwards, so you can see it's this blue line, it's the 12-month moving average. And when you transition from a bear market to a bull market, the price passes through the moving average. So what you're looking for is not just one of these things to happen. We're looking for multiple indicators to give us a positive forecast. It's how I do my weather forecasting. It's how it all science to an extent is done. You don't just rely on one indicator, you rely on multiple indicators, because when you're trying to predict the future, this is the key point here, and people troll me on Twitter saying, oh, you're just a weatherman, and that kind of stuff. And that's just really comes from a place of ignorance, because being a meteorologist and a climate scientist, you have to learn the laws of atmospheric dynamics. You need to be fully qualified in mathematics and physics and understand all the principles and laws of motion, Boyle's law, all the laws that govern what happens in the atmosphere. And all these kind of things that go on are very, very similar to what's happening with the share price here, and how we forecast the weather and how complex computer models forecast the weather. They don't just look at one element of the forecast. They kind of pull together thousands and thousands of elements of prediction, and you'll get a number of different forecasts. Now, sometimes those forecasts are all very similar, and that gives you high confidence. And other times the weather forecasts for 3 or 4 days ahead, the computer models can be saying lots of different things. So then you have to have a look at the detail to see which one of those possible outcomes is the most likely. Is it going to be a dry day in 3 days' time, or is it going to be a wet day in 3 days' time? Sometimes all computer models will say the same thing, so you've got very high confidence, and your forecast it comes with a high confidence level that it's going to be correct. Other times, because of what's going on in the atmosphere and the uncertainty levels and the chaos in the atmosphere, the computer models are all saying different things. And that's just the way science works. You know, you can't always, when you're predicting the future, have the same levels of certainty. Sometimes high degrees of certainty, sometimes low degrees of certainty and confidence. Now, when you get these multiple factors coming together, price bouncing off the arc, passing through a long-term resistance line, breaking above the 12-month moving average, that's equivalent to my computer models, our weather forecasting models, all giving us the same forecast, all pointing in the same direction and saying that this is, 99% likely to happen, not just 50% likely to happen, which doesn't really help you very much. So at this point here, it's possible to be confident, highly confident of your forecast. And as long as price, this series of green and red bars, as long as price remains above the 12-month moving average, then as a longer-term trader, I'm happy, or longer-term investor, I'm happy, because we're in a bull market now. The moving average, this is a 12-month moving average, so it's at any point on that line, it represents the average price over the previous 12 months. So once it starts to go up, we're in a long-term uptrend. And as long as the price remains above that, that's great. So that's all good. So hindsight's a wonderful thing, but what's my forecast at the moment? And what confidence levels do I have? Well, for Abra Silver, you'll notice this point here where we are now, and it's coming down again to touch multiple lines and places of resistance, just like it did down here. So we've got the 12-month moving average, which is very close to the current price. We've got the edge of the arc, which is very close to the current price. And we've got this entire horizontal resistance zone, which is very close to the current price. So they're all giving strong support. So at the moment, and what is the 12-month moving average? It's 47 cents. Current price is 50 cents. So as the 12-month moving average comes up, what we can say as a long-term investor is that as long as price remains above 47 cents, above the arc, then we are confident that the price is going to continue in an uptrend. So it's really, really important to know where these lines in the sand are, where these points of importance are, because as long as you're way above it, then there's nothing much to worry about. You build out a bull flag, you bounce out, you come out of that, and that's what happens when you come out of a bull flag. You form another bullish pennant here. I call it a bull flag, it's a bullish pennant actually. Consolidates up and comes down, consolidates again. This is all normal price action in a bull market. The only time that story changes is when it breaks down through the 12-month moving average, because that will probably indicate that we're heading down into the 8-year cycle low, which is later in 2023 or into 2024. That's where precious metals have an 8-year cycle, up, down, and you get a low point every 8 years. So that's where we've got half an eye to the future. But as long as we remain above the 12-month moving average, then continued upside is the forecast. Now, if you don't and also we've got the stochastic RSI is down in the low zone at the moment, which is telling us there's a lot of fuel in the tank for an upside move, because when you get down into this low zone and it begins to lift up, then you get a good swift upwards movement in the price. You can see it every time we've had that stochastic in the low zone. When it lifts up out of it, the price rises. And if you think all of that is a bit, you know, perhaps it works on this occasion, but does it work on others? You can go to my website. Now, we've got northstarbadcharts.com, which is the website which myself and Patrick Karim run together, and many of you will be viewing this on northstarbadcharts.com. But many of you will probably be watching this on YouTube, via Twitter, or wherever. So you might not be aware of this, but there's a secondary website, my own website, northstarcharts.com. And the reason I have this website is to have a place where I can put all my past forecasts. And if you look on my previous predictions, you can see my predictions that were made a year or two ago for the US dollar, for gold, for Ripple, Ethereum, Bitcoin, Litecoin, ratios like XAU, JPY, Japanese yen, and commodities, my commodities forecasts. So these are big picture forecasts where you can look at what I was saying back in 2019 when gold was consolidating, and I was predicting using all of these techniques. I don't want to go through it all in great detail now, but those of you that follow me and were following me 2, 3, 4, even 5 years ago on before I joined Twitter, on other websites, you'll know my techniques and what my predictions were. And I'm very proud of them, because they all came true, and they all played out pretty much as I expected. And the evidence for that is all here in these charts, which were published at the time. Time after time, these techniques have worked, and it's not, you know, they don't work for no reason. They work because of the sort of evidence gathering techniques that we're using, both myself and Patrick, on northstarbadcharts.com. So you can follow my forecasts for the US dollar as well on here. All of the predictions that were made a long time ago, long before the dollar fell. My prediction there was for the dollar to obey the rules of this inverted arc, which it did. Ripple, of course, when it seemed like the end of the world, and everybody was expecting Ripple to go down to zero. Not quite sure why the charts aren't showing on here at the moment. The ARC predictions, I have to have a look at that in a minute to figure out why that's not working. Showed us the way. The ARC prediction showed us the way. And so same here with Ethereum, with the predictions that I made for the price of Ethereum long before we got way up over wherever we got to several $1,000s. So yeah, all of these forecasts. We've got Bitcoin on here as well. A lot of these charts you'll be familiar with, but this is, you know, back when Bitcoin was $9,000, and the charting techniques that I've just been explaining to you were able to predict the move out of the pattern, not just the fact that the price was going to move upwards, but also the time that it was going to achieve these targets. These techniques that I use, they don't just give you a target price. They very often are able to narrow down a target time as well, which is important. Same for Litecoin there, with the Litecoin chart, which many of you would be familiar with. And at the time, it sounded ridiculous to be calling for these sort of prices when we're down at $50. But as I say, bouncing off the arc, moving through the resistance line, moving through important moving averages, pulling all this evidence together allows these predictions to be made, commodities as well. So we've got my commodities forecast that this was a false breakdown, and we were going to see an around the apex move upwards. And of course, that's, you know, exactly what happened. I put that black arrow on the chart, didn't touch it for month after month, and just tracked the price as it followed the forecast to perfection, built out a bullish pennant, and then came up and hit my target. So, you know, take a certain amount of criticism on Twitter, which is fine, but you know, the evidence is there for people to look at. If you want to sort of go through past case studies, look at the forecasts and the predictions, we've got uranium on there as well, which was another really big call at the time for the uranium bull market. But using these charting techniques is able, you know, it's able to give you the confidence that not just one technique is suggesting a particular outcome, but multiple factors are working together to bring together a confident forecast. So if you're just on the fence and debating whether, you know, technical analysis is helpful or useful, hopefully this video here has just helped a little bit to just show that, you know, I'm not claiming that these techniques are 100% accurate 100% of the time. Of course they're not, because we're trying to forecast the future here, which is never easy and it's always a challenge. But what I'm trying to do and what Patrick's trying to do is to stack the odds in our favor. The charts that we put onto our website, northstarbadcharts.com, these charts are here to help guide you and help give you added confidence in your trading. We mark support and resistance levels on there. It's not for us to, with this website, we're not aiming to tell you when to buy and when to sell, really, because that's your financial decision. Everyone's got different levels of risk tolerance, for example, and, you know, one person may be prepared to accept a certain level of loss while someone else really doesn't want to accept that level of loss because they're trading short term. Me personally, you know, if I'm in it for the long term, then I'm quite happy to just let that stock sit there the majority of the time and put up with a 20% loss, knowing that it's going to gain 300 or 400% over the next few years. So it's really complex trying to give individual trading advice to people, which is why we don't do it. But these charts give you all the information that you need to make your own trading decisions and to assess levels of risk. And of course, when you look at the charts, it's not just the chart that you're getting, you get commentary underneath as well that explains you know, the important points about the charts. So you know, again, if you're thinking whether it's maybe worth $10 a month to join us at northstarbadcharts.com, you know, we have videos on here and podcasts on here as well. We've got a section on here where you can search for, well, we've got podcasts, requested charts. What I was looking for here is podcasts. So we've got a podcast section where myself and Patrick will do things like this and talk about the charts in more detail. Sometimes the charts are a little bit complex and a little bit, you know, we feel they need a little bit more explanation, a little bit more detail, and to try and give the added value. Obviously, when, you know, we've got people paying $10 a month, we want to give extra value compared to what we're able to give for free on Twitter, for example. So we're giving many more charts, much more detail, and podcasts to back it up. Also some tips, hints, and videos on charting as well, charting tips to help you get started doing your own charting. So, and as I mentioned as well, we're also taking requests on here so that people can request what charts they want. Scroll down to the section down here. Oh, actually, it's on the top, isn't it? Requests. And people are able to request what they'd like to see charted. Myself and Patrick will keep an eye on what's been requested. All these different charts that people are wanting us to do. There's a lot of stuff here, so it takes us a while to get round to it. But the idea is that that people have an element of being able to sort of request what they'd like, and we're able to keep an eye on what's most popular, what's highest on those request lists, and try and work our way through them. So yeah, that's a little bit of a walk through the charting, the techniques we use, my website, the joint website, northstarbadcharts.com. And the only thing I haven't touched on is that we'll be aiming to give some training and tuition sessions. You've probably seen on Twitter that I had a poll recently just looking to see if there was much interest for more detailed training tuition on all these charting techniques. And myself and Patrick have recently run some very detailed courses that took place over an entire weekend, obviously demands quite a lot of people's time. So we thought perhaps a shorter course of maybe 3 hours at lower cost would appeal to a number of people, and it looks as though the demand is there. So we'll be aiming to put on some courses in a few weeks' time. We'll publicize those on Twitter in the usual way, and people can sign up as they like. So I think that just about covers everything for now. If you've got any questions or you want to comment on, as always, just put something in the comments. But other than that, thank you very much for taking the time to watch and listen. Cheers, everybody.